How the stock market really works, explained simply, with insider secrets. The stock market, a place where millionaires are made, and dreams can vanish before lunch. But here's the truth. Most people don't actually understand how it really works. They think it's gambling, luck, or magic. It's none of those. Today, I'll show you, visually, step by step, how the stock market truly functions, why prices move, and how you can use this knowledge to grow your wealth smartly. Not magic, not luck, it's logic. Hi everyone, welcome back to the channel, where we turn complex finance topics into simple, clear strategies that anyone can understand. If you've ever wondered why stock prices rise and fall, what actually happens when you buy a share, or how professionals really make money from it, then grab your coffee, because you're about to understand what 90% of investors never do. 1. What is the stock market? Let's start simple. Imagine the stock market as a giant supermarket, but instead of apples and bread, it sells pieces of companies. Each share is like a small ownership slice of a company. When you buy a share of Apple, you literally own a fraction of Apple, tiny but real. 2. Why do prices go up and down? Now the million-dollar question, why does the price move? It's all about supply and demand. If more people want to buy, demand goes up, price rises. If more want to sell, supply falls, price falls. But why people buy or sell, that's driven by emotion, news, profit reports, politics, even Elon Musk's tweets sometimes. Price, market demand, market supply. Emotions, expectation, market movement. 3. How companies make you money. As a shareholder, you make money in 2 ways. 1. Dividends. The company shares part of its profit with you. 2. The capital gains. When the stock price goes up, and you sell higher than you bought. Example time. You buy 10 shares of XYZ at $50, total $500. Price rises to 75, total $750. Profit, $250. That's a 50% gain. Then add $20 dividends, total $270 profit. That's the beauty. Your money works while you sleep. 4. What moves the market? The stock market is like a giant voting machine in the short term. People vote with their money based on feelings and headlines. But in the long term, it's a weighing machine. Only the real performance of companies matters. That's why great investors like Warren Buffett say, in the short run, the market is a voting machine. In the long run, it's a weighing machine. 5. How professionals analyze stocks. Professionals don't just guess, they use analysis. There are 2 main approaches. The first, fundamental analysis, looks at a company's actual business, revenue, profit, debt, growth. What is fair value? Fair value earnings, X, 1 plus growth rate, discount rate. The second, technical analysis, looks at stock charts and patterns to predict behavior. Think of it as studying the psychology of investors through lines and graphs. But here's the insider secret. Most successful investors combine both. They buy good companies at fair prices and hold them long enough to benefit from compounding. 6. The compounding magic. Albert Einstein called compound interest the 8th wonder of the world. If you invest $10,000 and earn 10% annually, in 10 years you'll have 10,000x 1.1 des 25,936. That's nearly tripled without doing anything extra. In 20 years, over $67,000. That's why time in the market beats timing the market. So now you understand how the stock market really works. Not gambling, not luck, but logic, behavior, and patience. If you want to go one step further, check out my next video. Short-term trading or long-term investing? Which one actually makes you rich? You'll learn which strategy fits your personality, your goals, and your time. Thanks for watching. Don't forget to subscribe. And remember, money grows when knowledge does. See you next time.